Sticky inflation is helping drive sales of secondhand shops, and ThredUp is one of the businesses getting a boost here. The company out with quarterly results this morning. Revenue topping the street's expectation. It's up 15% from a year ago, and the thrift retailer sees more growth ahead, revealing it expects the global secondhand market to nearly double and reach $350 billion by 2027. For more on this, we turn to Dylan Carden, who is the William Blair Consumer Research Analyst here. Great to have you here with us this morning, Dylan. Help us both go into the environment here that companies could be beneficiaries of if they are able to kind of strike the right platform tone, or at least embrace consumers with the right inventory as well that they would like to see up for resale.
Yeah, sure. So it's not overly complicated. You have effectively two things going on here. One is that there's an ever-present need for value in the consumer space, right? If you look at effectively the rise of the off-price retailers in the last 20, 30 years, they've won primarily because they offer compelling value to consumers, right? If you look at kind of where inflation and crowding out of spending is in the consumer landscape, right, we're spending increasingly more on healthcare, housing, education, right? So most any other discretionary category is deflationary to flat at best from a pricing standpoint, right? So if you can offer branded or quality goods at a discount, that tends to be the winning sort of equation in retail. The other thing that's happening here as it relates specifically to ThredUp in the resale market is just you've removed the stigma around secondhand goods, right? So historically, there's been sort of a dismissal of secondhand goods as cheap or just stigmatized. So by removing that from a younger generation standpoint and offering these branded goods at compelling value, that's why it's sort of a compelling space, so to speak.
Dylan, it is still an uncertain macro backdrop, obviously. I mean, take a look at the economy, the fact that inflation's still high, the fact that there is still this risk of recession. How big of a challenge is that to a name like ThredUp, or are they relatively recession-proof compared to some of their rivals outside of the secondhand space?
Yeah, I mean, they showed in the pandemic that they weren't necessarily macro-proof, right? I mean, the business collapsed along with any other apparel retailer, and that was simply because they are selling a fair amount of goods for people going into the office or for occasion-based, right? So to the extent that you have a consumer that's making a decision between buying Lululemon at Lululemon or Lululemon at ThredUp, the same discretionary overhang is going to impact this business as much as any other. So I think it's not countercyclical. I mean, the best you could say is that potentially it is somewhat more resilient if you get a pure, recessionary kind of environment that's sort of an overhang on discretionary spend, and that it was a 20-30% value to what you would otherwise sort of be considering for a like purchase.
It's interesting because some of even the companies that you mentioned there in Lululemon, Canada Goose, they're all starting their kind of like trade-in programs and then allowing some of that inventory for themselves to be relisted, and they're just kind of shuffling it under a resale or gently used gear, like new, I think is Lululemon's one. And so all of that considered, How does that impact a company like ThredUp?
Well, so the apparel space is the second most wasteful space when it comes to the environmental impact, right? Only after oil and gas. And so to the extent that, and I know ESG and all of that, the environmental concern on some of this stuff has sort of been pushed to the sidelines more recently, but to the extent that the industry has to show some forward progression and from an environmental footprint standpoint, that's what's going on there, right? And there's a couple of sort of things here, right? If you sell a durable product, right? So luxury and outdoor, you mentioned Canada Goose, right? If your product is actually durable in nature such that it can have second lives and be used more than once, you have an opportunity, and Patagonia does this, Arc'teryx does this, to sell it again. Hermes, right? So you can buy the product back, and there it's actually compelling from an economic standpoint because you're selling the same product 2, 3, 4, multiple times, right? So if you think about sort of the gross margin impact of that, you actually get to sort of above 100% gross margin in theory, right? If you sell a good that is less durable in nature, so Gap, right, basics, right, everything that ThredUp effectively targets, you don't stand as good a chance in doing that. So what ThredUp is doing now from its resell as a service model is effectively taking advantage of that dynamic, right? That if you are a Gap or an Abercrombie or whatever, and you can't rebuy and sell the goods in the same way.
Right.
ThredUp sweeps in, says, "Hey, we'll co-brand a similar type of website," and then you kind of optically look like you're sort of supporting the secondary market.